Satish Rajaraman. Satish is the Executive Director at Standard Chartered and leads structured solutions for transaction banking. Been with the bank for 20 plus years and helps advance trade and crush solutions. Very warm welcome. Just follow the. Thank you. My next panelist is David Ko. David is the Managing Director and owner of Welcome, David. So David has been head of transaction banking for APAC for Sumitomo SMBC Bank, and with 30 plus years of experience, I'm really interested in understanding his corporate banking and liquidity and risk filing experience. My next panelist is Rahul Saxena. Rahul has spent 2 decades in trade finance. Warm welcome, Rahul. Rahul has had an esteemed career with multiple banks in trade units, right from sales, distribution, over the last 2 decades. And he now heads APAC for Eliant Trade Finance, which is a subsidiary of Apollo on a private credit. My next panelist is a very interesting group CEO of Aurionpro, Ashish. Ashish has been innovator and has been with FIS for a very long time, and he came on to join Aurionpro team. Ashish brings his new vision to power the Aurionpro to the next generation of growth. Very warm welcome, everyone. So we've been again the longest panel of the day, I think. We'll make it interesting. So Satish, I'll start with you. Now, see, transaction banking has been around for almost 2 decades. Citi started it. Singapore grew it across multiple banks. Many countries took lessons from it, especially Europe, Asia, India, China. So how do you see this evolving now, going forward from an SME to corporate with digital and AI?
Thanks, Chetan. Good morning, everyone. You asked about SME and corporate, and to me, in a way, they are 2 ends of the spectrum. But that said, I think there are some common themes that are emerging when it comes to expectations from these 2 diverse segments as far as digital banking is concerned. I will start with some common themes, and then we will double click on each of these customer segments independently. When we talk about expectations from digital banking, I think a quote comes to my mind by Bill Gates, and many of you would have heard it. He said, "Banking is necessary, banks are not." I think he said this somewhere in the 90s, more than 30 years ago. It still rings very true. I particularly like this statement because it lends itself to different connotations, right? You can look at it in a million ways, and all of that connotations will be true. And I want to touch upon a couple of contexts. One is when we say banking is necessary, banks are not, we are essentially talking about a construct where banking is a verb, not a noun, right? It's an activity that we do, not a place we go. I think that has been a significant evolution when we talk about digital banking. It may sound a little cliche, but we need to appreciate the fact that we have come a long way in terms of how banking has become truly digital. Yes, there are some exceptions. When we talk about cash, if you look at the industry data, more than 95% of cash transactions have become digital. But when you flip over to the trade side, it paints a different picture. I'm sure we will unpack that later in this discussion. It ranges between 52 to 55%, so there is some work to be done. And if you look at the pillars of digitization, I would like to see it from a client's life cycle point of view. There is onboarding, there is transacting, and there is servicing, right? Banks have done phenomenally well when it comes to transacting and reasonably well in servicing, but onboarding still remains a challenge, right? There are exceptions, markets like Singapore. I think there's integration with Corpass, SingPass, where the onboarding has become fairly digital and seamless, but it is not the case across the board in Asia and beyond, right? So there is still some work to be done. The increasing expectations from customers to kind of push the boundaries of digital will continue to evolve this space. So that's a work in progress, if you ask me. The second connotation, going back to the quote, banking is necessary, banks are not, is banking is not exclusive to banks, right? May sound a little strange coming from a banker, but I think we need to accept the fact that the entry of barrier is non-existent, right? With the advent of open banking, where information is no longer siloed with banks, right? We have to exchange information at an industry level. That has led to third-party fintechs coming in and play the role of an aggregator, right? They can source information from different banks, which have historically remained siloed, and create aggregated, intuitive data views on behalf of their customers. Right? And many countries in this part of the world and beyond also allow third-party or non-banks to participate in real-time payment network. So that has led to new form factors as to how payment services are provided. So I think, and eventually I think all this is leading to an elevated user experience, because fintechs come in with a mindset that my product is user experience. It's not payment, lending, or FX. I'm going to make a difference in terms of how intuitive the user journeys are going to be, and that is going to be my claim to fame. Right? That is rubbing off on the banks. We don't have a choice but to kind of live up to that level of benchmark that these fintechs have set up. So I think, again, it's a fantastic statement. I don't know if Bill Gates actually meant all these things when he said that, but I think, you know, it's up to us to kind of interpret the way we want. Quickly double-clicking on one end of the spectrum, SMEs, I think there's a couple of things that I wanted to point out. One is, I think, the advent of SaaS platforms has created a revolution. Right? SMEs historically have been users of a digital banking portal or an app, but with the advent of these SaaS platforms like Xero or Zoho, bookkeeping, ERP, TMS have become really cheap, and more importantly, they are all API native. So most of these platforms offer off-the-box APIs when it comes to payment initiation, FX, or consuming bank statements, and they expect bank to kind of become, or the connectivity has to be the API as the default as far as the company-to-bank connectivity is concerned. So I think that is a shift that we are seeing in the SME segment. So API banking is not restricted to the large multinational corporates, but it goes down to SMEs and MSMEs as well. Second thing which I'm personally fascinated about is this explosion of digital marketplaces, right, where SMEs can be a part of, either as a seller or a buyer. So essentially what this has happened is cross-border commerce has become borderless. Now if I'm an SME in Singapore and I want to source materials from Vietnam, I don't have to have a physical setup or a bilateral contract with my supplier. I can simply be part of a marketplace, like a Lazada or a Shopee, for example. So what it essentially means is the cross-border nature of SMEs, so the quantum of cross-border transactions have gone up. Earlier, I think they were largely domestic, but I think their needs are also getting more and more sophisticated. So banks need to start treating SMEs like a mid-sized corporate or a local corporate. So I think that is a shift that definitely is happening. If you switch to the other side of the spectrum, large corporates, oh boy, there's a lot going on there. Right? And I want to talk from personal experience. I come from a team called Structured Solutions, and my day job is to build bespoke solution. And what we mean by bespoke is anything that a standard product offering cannot fulfill needs to have an overlay of customization or relevance needs to be created to bridge the gap between what the product offers and what the client is looking for. Now, that has become very soon a norm with large corporates, right? And I can quote a few examples. I mean, we have a client in the aviation sector. They want to launch a business wallet, right, to let their agent or network of travel agents top up money in the wallet to be able to sell their tickets. This was seen as an effective alternative to the earlier model where travel agents were required to issue bank guarantees to kind of combat the settlement risk, right? Because they get tickets allocated first and then they settle the proceeds post-sales. This inherently created a credit risk. So they're looking at wallet as an example. So this is not something that you would have imagined a decade ago, an airline trying to set up a business wallet. What comes with it is a set of complexities. If you're issuing wallets, it is considered as e-money issuance under many jurisdictional regulations. And if you take MES, I think they need to be a major payment institution license holder. So I think, as a bank, we need to kind of understand how the business models are evolving. And with each evolution, there are different complexities that kick in. It could be technological in nature, regulatory in nature. Banks don't have a choice but to kind of keep up with this shift and play different roles depending on what the client is doing. So following the client and understanding the metamorphosis that the clients are going through and being with them hand in hand in every step of this evolution is going to be the differentiator. I want to quickly touch upon the point that Srinath mentioned that products are commoditized. Every bank in the street can do payments, liquidity, FX, lending. But I think where the differentiation is going to come is how are you going to contextualize those to suit business needs, and then how we reinvent ourselves as a bank to serve the ever-evolving needs of the clients. Sorry, a long-winded answer, but there's a lot to unpack there.
Very interesting thought, and especially customer centricity, the theme you brought, right? Which is applicable right from an SME to large corporate, and designing hyper-personalized solution, which is what you kind of brought as a very, very important thing. Maybe moving to you, we heard since morning AI, Web3, and many of these automation is coming after put RPA into the industry. How is the traditional transaction banking going to change looking at this? And should one go all in? Should one wait and look for proof of concepts to be ready?
It's a really good question, and thank you. Good morning, everyone. Let me first try to address this in two different ways, right? Because for me, I've been banking for over 32 years, much of it in the front line with P&L responsibility and very stretchy sales targets. It's all about client adoption to start with. Banks and the banking that we do not exist in a vacuum. And I can build the best AI-enabled solution, but if no client wants it, then what's the point? I have a very finite investment budget, and I'm sure all banks do. So we have to be highly selective. I mean, just for Standard Chartered to have a role like Satish's, I think it's a real luxury, and it's a wonderful thing to do, because plugging that last mile is so important to come up with a solution that fits the industry. And that's where, to segue into the answer, how AI will drive the evolution of transaction banking. I think the power of the technology, we will have to become a lot more sensitive to the buying behaviors and the wallet that's there by sector. If you sort of think about the way banking was in the 90s to even the early 2000s, even when those RPA adoption and the like, the bank had a service, and the client can just sort of say, well, yeah, we'll take it, because there really aren't much options, right? And then it's just whether or not you are, buying a brand, buying a network with the branch capability, individual relationships you've built up, or the way Japanese banks tend to do. We lend a lot of money, and they say, can we have other business, please? Right? Which a lot of other banks are doing the same. But where AI comes in, if I look at the building and construction sector, right, property development, the kind of technology they use to track and trace, against the completion of the project, and where they can draw down bank financing. I was just having this really good conversation last night with a friend of mine in the industry. All that conveyancing, if anybody's ever done any real estate financing, and when you hit that stage payment, the amount of paper you go through, and then you say, okay, here's the next 10% of your money, thank you very much, and then it flows right through the system, right, from the SPV, owned by the developers, to the main con, to the subcons, to the subcons, and the money starts to flow. The amount of paperwork and manual work that has gone into that over the hundreds of years, all that's going to change. You take that to automakers, and you take that to even the tech industry, something we've been doing a lot lately, financing the development of data centers, it's a massive boom. You know, who comes in to build a big box, having secure access to power and water, plus the land, of course, right? Who comes in to set it up, and then who steps in to operate it? It's so bifurcated right now. Nobody comes in and says, yeah, this is my data center. That just doesn't work anymore. And I think in that sense, the way AI can be used, I can provide a much better, more elegant service at a much more efficient way, right? And then at speed and accuracy, and being able to meet all the regulatory and compliant standards required. I think that's really, really exciting. But again, for me, I have to come back to the clients that want to embrace this. And I want to use a quote from a good friend of mine in another bank, Melissa, and she was just, saying this on Monday. Have invisible finance with visible impact. That is the beauty, and I think that AI can enable ultimately, without us having to go back to the client again and again and say, please sign this now, please do that, and can we have another big stack of papers, anywhere from onboarding to transaction execution.
Quite amazing. So AI needs to be used smartly and contextually, as we heard, to each industry and taking the set solutions. Rahul, moving to you, and you've had 2 decades of trade, and you heard what Satish mentioned about trade and the opportunities in trade in terms of automation. It's a document-intensive business. It is spread in many markets are not digitized, or documents come across digitally. Now, how do you see these new market players who are entering the market with seamless, real-time, are going to change the market, and is data analytics going to play a role in it?
Chetan, thanks for the great question, and good morning, everyone. You talked about my 20 years, but I'll just stretch it a bit more. The first letter of credit was actually issued in the 15th century in Europe. It wasn't really, the current format of that instrument, but it was like the way trade finance started. For the next 600 years, the only thing which, as trade financiers, we did was ride on digital payments or electronic payments, as they were called in late 90s, and develop a product called supply chain finance. But other than that, trade has been document heavy, and the reams of paper which David just alluded to, that has been the way of working. If you look at it fundamentally, trade finance is about, from a client's perspective, it's about speed and ease of, accessing working capital which is fit for its business. A very simple ask, and, the 2 dimensions which really control the access of that capital are credit risk and operational risk. Now, because we did not have an alternative over 600 years, till the time COVID hit us, we were all buried in reams of paper. In paper, we trusted. That was the only source of us getting an insight and getting comfortable, with the risk profile. And again, one would say that, it was more opaque than transparent, even with the kind of paper intensive work which we did. What changed, around COVID is that the whole world moved to digital, and we had no option. We have been always a lazy cousin to the cash management fraternity. We didn't have an option. We had to adopt, to the situation. We saw the emergence of new players, and I personally, got onto the new wave. FinTechs came in, and they just changed the way we were thinking about trade finance, and introduced some things which were very new and fresh. FinTech started leveraging data which was there in the physical, supply chain. And with all the AI, all the digitalization which we have been talking about, there's a huge data footprint which is available. And FinTech started, pouring that kind of digital footprint into analytics, which helped in terms of, making some decisions. And that also helped in terms of reducing the cost and time and effort which is required to process, these transactions. And they collaborated with the bank, and that helped in terms of, creating a value proposition for the small and medium enterprises. It also helped in terms of improving the efficiency with the larger corporates. And more importantly, within the banks, it helped in terms of getting the fulfillment of the transaction easier, faster, quicker. And this whole transformation, was brilliant. It happened as a necessity, and then over a period of time, the trade finance fraternity is building on it. We've seen things like digital or electronic bill of lading, adoption of that in various countries, including the emerging markets, and this is just the beginning. What we are now seeing is that instead of paper, data is becoming the center of the approach. And data analytics obviously creates the value proposition around it. It's just changed the way we are doing, and it's not just about efficiency. I think intuitively all of us understand that digitalization is going to create efficiency, even cost reduction. Most important impact, as David said, like the visible impact you need to really concentrate on is the understanding of the underlying risk, appreciation of that. That has really, really scaled up significantly, which has led to something which is really impactful, which is the emergence of new funding sources, new capital coming into this whole business. And that's where, private credit, for example, is one of the latest, kind of event in this space. At least 5 big private credit, managers, including my company, which is Apollo, are now looking at trade finance as an asset class which they are comfortable with. We'll get more comfortable with this, once we get, banking partners who are essentially able to articulate the risk in a more informed manner using, the digital footprint which we have been talking about. So to me, it has been a kind of tremendous journey, and it really rhymes well with the theme which Pat had in the morning. Gradually starting from the 15th century to COVID, and then suddenly over the last, I would say 5 years, wherein, we are getting new products, new capital, and hopefully democratization of trade finance, which is what, all of us have been looking for.
Fantastic way to put it, and how trade industry has changed. Ashish, you heard the bankers, you heard the morning Pat and other panels. Clearly, financial institutions are valuing the change which is coming post-COVID. And you, being a CEO of FinTech, have been building very interesting transaction banking for value propositions. So how do you see FIs getting benefited with the innovations you and your team brings? So rather than they internally trying to hard work, use an experience of someone who's done it, who kind of see it from global perspective.
Hi, thanks. Hi, everyone. When you think of using innovation, I think David was just saying, what good is something if my client doesn't use it? You're essentially traveling down 2 vectors, right? You're traveling down one, what does the business need? So innovation driven by what does the business need? Second, what can the technology do, right? And there are 2 more or less independent vectors that should converge at some point, right? But the start of that innovation journey happens along one of those 2 vectors, right? And so when you look at what does the business need? So I'll give you an example, right? We're working with one of the large banks in Asia on a transaction sort of transformation program, where the key driver is the reason you want to move to a new architecture is to integrate AI into the technology stack, right? Especially on the cash side. So you say, okay, I want to bring AI in. The challenge that happens is obviously from architecture standpoint you need to be ready, but when it comes to AI enabling an application, right? So any application, right? If I step back at a 100,000 foot, most enterprise software is the same. You got some sort of a front end. You got a deal entry screen, a customer front end, a corporate front end. You got a workflow where a whole bunch of checks, decisions, balances getting made. You got some record keeping, some back office, right? I mean, at a very, very high level. You say, how do I AI enable this business process that the bank is using right now, to this application to run its business process? How do I really marry intelligence with every single checkpoint, approval, decision getting made with the right level of intelligence, right? So which is, and it could be anything. It could be a fully autonomous agent. We've been talking about. It could be a blend of rules and ML. It could be a human getting a predictive output from an ML and doing something, right? How do you do it? And I think the main, you could actually end up boiling the ocean because there's just a lot of decision points and a lot of that your customer does not need, right? So I think the most important thing when it comes to business need driven things is value prioritization, right? I think we really need to get to what is of value to my client, and that thought needs to happen at a bank level, right? And that's how we got through with this client, and finally you said zero in on what we think are the 5 biggest sources of value, because what is really happening, especially when you're doing intelligence interventions right now, is for the last 40, 50 years, enterprise software has been driven by productization. You say, how can I productize more and more and move down the service intensity? That's it been there. As you get into intelligence, the problem is, at least for some time, it will take us a lot of effort to get the right level of intelligence done, because you really need to get the model in and fine-tune it to a level of accuracy that the automation actually works, right? Otherwise, you've got a toy application sitting in a sandbox which does lots of cool stuff, right? But you can't actually use it in production. So data to model is super easy these days. I mean, like, beyond super easy. A 5-year-old kid can do it. Model to production is very, very hard, because it comes down to, does my client see the value, right? So you say, okay, what is of the most value? Cash forecasting is of the most value. I really fine-tune that heavily to get to a level where it is of use. And I think that's one. So that is that kind of innovation, right? The second is essentially, what can the technology do? Now, this is where you're actually pushing the boundaries of where you are from a use case standpoint today, right? Again, I'll give you an example. Not an Asian one, working with a European bank. So one of the things that we came to was, so when it comes to unstructured data, I think LLMs have more or less mastered, right? So you say, okay, I've got, obviously you crawl the entire web from whatever is available, and then you can work on top of it on the back end, right? But most of the transaction data, and banks with the history of an SMBC or Stanford, or someone have 50, 60, 70 years of transaction data sitting in there in tables, in databases, which are attached to these applications that providers like us provide. It's not, LLMs are not designed to ingest tabular data, right? So obviously you can sort of serialize the text and bring it in. It just won't be efficient. You'll bust your context window limits. You will obviously like massively bloat the token use, right? So it's like it really inflates the whole thing. So it's not logical. So we say, okay, you need to build out how about we build a giant foundational model for tabular data sets, right? And no one has really built it. We got we run one of the top kind of research labs in this field. Overall, so we've been sort of publishing some papers on it. And we work with this bank, and we said, okay, how about we go and do some joint work on building out this thing, right? So you basically organize the entire tabular data in the bank around 50 big areas and sort of go from there. This is not small work, and this needs a massive amount of research focus, right? And this is where I think we will hopefully publish a joint paper soon. And so you're sort of almost working as one team, where the bank's researchers sitting with our researchers, Paris labs, Mumbai labs, and or remotely as well, and sort of working together to do it. So which is the other thing, when you're sort of operating on the boundaries of technology, I think the mindset needs to really shift from almost a customer-vendor relationship to really working together to try and get to that case, right? Because most of the research-driven organizations like us won't really have the, without a real bank kind of, so this is a classic case, right? I mean, I would build a basic model. I can't really see that it becomes very useful without a real bank with that scale working together to create that giant foundation model, right? And once you build it, then of course, you can go from there, right? So I think just changing that mindset from a classic customer-vendor relationship to saying, okay, we got to tackle this, and this is really working together to co-innovate and do that. So that's the second vector of innovation that I think very important, and I think this sort of is a great example for it. The more you push the boundaries of what can be done with intelligence, the more that will need to be done, because it's not a product, and it will evolve, and it's more a journey than a particular sort of destination as classic application products have been, right? So that has to be a joint team working after. We can solve, the pain points, if you will, or where liquidity might be stuck, or even just at a credit level, where can we unlock private capital because I got to go back to what he said. I have not heard my Bill Gates quote forever, and but I don't lose sleep over it, right? Because I made a career in banking and within banks, until somebody else can do this better, putting capital, liquidity, and their reputations on the line every single day, right? In a highly regulated environment, and the officers and executives are held to task to make sure they maintain compliance. Nobody's stepping up. Bill Gates got a ton of money. He ain't putting it into banking. He'll buy our shares, but he's not putting his own capital. We talk about blended finance, right? Nobody's providing concessional capital. Everybody wants their pound of flesh, right? So let me stop right there because I can carry on.
I think the point Ashish made was very, very important. That what you do on innovation and how do you link it to collaborations and partnerships with the bank. That makes all the difference. Now my next question, and the last question to the panel, is an open question one everybody can answer. I would like to see, looking at future, what is that one overlooked area in the transaction banking today where digital transformation is going to fundamentally move the needle over the next 12 to 24 months?
I'll probably go first. I think, personally speaking, if you look at supply chain, there is a physical supply chain and there is a financial supply chain. Right? For decades, these two have been disparate. I think there is a lot to be done, and we don't have to wait for new technologies to evolve. But how do we create a confluence of physical and financial supply chain? And what I mean by that is, if there is an event happening on the physical supply chain, can a financial activity be seamlessly embedded into that event? So today, if a shipment is reaching a port, then as a client, I need to initiate a transaction either to pay or to release a shipping guarantee if there is one. Why can't it be intertwined? Right? So the programmability of finance is going to be absolutely key. And as I said, you don't have to wait for a new technology to evolve. With the current engineering prowess that banks have, I think there is a lot that can be unlocked. And Stanchart is looking at this, and we have a shameless plug-in here. There's a tool called Payments as a Service. So where I think we can encode smart contracts into this payment engine to create smart workflows that can keep a tab on what's happening in the client's business operations. And if there is a financial activity to be executed, it just wakes up and auto-executes. So banks need not wait for clients to instruct. You know what's happening in the client's universe. You are the chosen global banking partner. Why can't you auto-execute transactions? Is a challenge that I think we need to throw at ourselves. But that's one area I think we could have moved much faster, but it's not too late.
Supply chain. David?
For me, I really had a hard time picking one out of two things I wanted to touch on. One is the network banking. And it's not what I want to make, the point I want to make, because everything that was said earlier today, in any G20 country, you're lucky you have up to 4 banks that will be able to invest in stable or token or CBDC. None will invest in all 4. So sleep easy. It's a journey, right? There are a lot of little banks out there. Even the likes of, and not small by any stretch of imagination, like a Silicon Valley Bank, it suddenly fell over, right? And even bigger players have to step in to save them, save what's left. But then, so yeah, that's something that I'll have a conversation with Sharon about, and then from Swift, about just the 2 tiers of banking that will come up over time. The banks that will be digitally enabled and the banks that are not, but will need to be supported because they play a vital role in the local economies. The thing I want to touch on, though, if you bear with me, is how do we deploy AI at industry level to make a change? Something I think we all ought to be, if not already, very passionate about: sustainability. MAS launched something about 3.5, 4 years ago called Project Nova. And how do we use AI to make sure there's no greenwashing out there? We picked up a few industries, one of which was green loans, for real estate, if a building like this says we're green, and there are 3 KPIs set, do they set the right KPIs? There's power now in computing and AI to say that every single building here across Singapore, if it's linked to a green loan, is it a truly green loan? Are the KPIs set the right levels, or is this a little softball for marketing purposes? We need to do a lot more of that. I know these days there's a lot more green hushing, but we still get a lot of flack about not doing enough in green finance and soon to be blue finance. And I hope that we are able to deploy a lot more computing power and AI to hold us all to a higher standard. Thank you.
So industrial use of AI. What do you know?
Yeah, I'll pick up something from your slide, Chetan. So this is essentially, I would say it's more to do with the vision which transaction banks have for themselves in the future, right? We've seen that when Grab started as a utility, it will become a super app. And there's a much more value which it contributes to the clients compared to what a simple utility would do. Transaction banking at this point in time is like a utility. But there is a potential of us becoming a super app, right? I mean, like what David alluded to, ecosystem, right? I mean, like there's so many players who are actually doing some great piece of work, but if everybody works in a silo, it really doesn't help. But a bank is in the center, it's a regulated entity, has the network, has the vintage, has the data which Ashish was talking about. Can it become a super app wherein, players who are working on physical supply chain, as Satish alluded to, players who are essentially, for example, insurance providers, marine insurance providers, private credit, funders, everything can be put together in the form of a super app, which is actually controlled by the bank. And it just helps in terms of serving the community much better. Pouring in mass data from different banks, creating value out of it. That's what I believe Ashish was talking about. All those kind of things can be really put into real life if the ambition becomes a bit bigger, and if we start thinking of ourselves as that super app and not just a utility.
Just a corporate super app. Ashish?
Okay, I was going to pick tokenization in general of assets of payments, but since David of trade, I still think that would be like super high impact. But since David was talking about industry-wide AI, I'll come to the overlooked part of your question. I think that's probably more important because I don't see enough people thinking about it. I think what will become really important as AI models get deployed into production, and lots of banks already going there, is the explainability, is the interpretability. I think almost very, very few banks are thinking about it, and if you start doing it at industry level. So I think Srinath was talking earlier, right? Banks are about trust. It's like one bank wants to know how did my model come to a decision. The regulator very soon would want to know, if you say the next 1, 2, 3 years. I mean, some regulators are already moving, but I think most of them would move over the next 2 to 3 years to demanding explainability on the models getting used. And so we run one of the more focused AI explainability labs around, at least in Asia. I don't think too many people do it. And we're publishing some research in that area. I think that needs a lot more focus. If we really have to start, if you say, okay, I'm optimizing the client's working capital and helping them, cash flow forecasting, whatever else, whatever the use case is, my client is actually using it. And even if it's not an auto decision on the bank's part, the client is still using that input to do something. And I really need to know. I can't say I made an API call to this model and this is the output I got back, right? So I think a lot more needs to be done to use these models in production. And if we start using it at an industry-wide level, the exposure is just too high. So I would say that explainability part, interpretability, the trust and safety scaffolding around these models, there is a lot that needs to be done before you start using them in production.
Quite a 4 different views, but all making sense in how corporate transaction banking can evolve. Thank you so much to the panel. I'll open it up for questions. Just give a mic, a couple of questions. You can just introduce yourself and ask the question.
Hi, I'm Cedar from Deutsche Bank. My question was, we talked about using AI, we were looking at the current size of the wallet, but I think with the democratization of AI, we also see underserved community, populace that comes into the ambit of banking. And for a lot of them to determine the creditworthiness, you need to have alternative sources of data. I mean, they might not be, within the banking system, or they might not have a very high presence there, but you will have to look at alternative sources of data to determine the creditworthiness. So, is there any, I mean, the question is to everyone on the panel, are there, do you also look at sources of data other than banking to determine whether you extend consumer loans and so on?
Are you referring to microfinance? Because I think AI can make a big difference in microfinance. It's a track and traceability of data, right? Not just data in and by itself, like you said, how is it organized, unstructured data, and how do you pull different things in? So we talk about Singapore, again, something that Satish touched on, the onboarding process of just having platforms like, CorpPass to your SingPass, that makes things so much easier. But in different countries, I think you saw in India, the moment there was an identity card adopted at the national level, that just transformed even at the C2C payments. And I think microfinance becomes a lot easier. Because, as SMBC, we bought Fullerton Financial India from Temasek a few years ago. We rebranded it as MICC. We're doing a lot of consumer credit within India. And our experience right now is a lot better than within these four walls. Like in Vietnam, for example, where we have a significant shareholding in FE credit. Just pulling data from every source available, we find that India is a lot more connected than Vietnam, surprisingly.
I think I agree with David. There are countries like India, where the availability of the data, especially from government sources, is far superior to some of the other markets. But what I've seen is a lot of use cases amongst the fintechs to exactly delve into the space which you have opened. So I've seen use of bank statements and smart readers of the bank statements to actually come up with the company's financial accounts, right, in terms of cash flow statements and balance sheets, which in SME space, whatever they give to you, you take it with a pinch of salt, but this is actual cash, and it just improves the kind of confidence that you have in the financial stability of the company. And there are fintechs who are actually developing things. There's an active use of shipping data and customs data, right, to essentially monitor the end user funds. Is there an actual shipment which has happened in accordance with the bill of lading, for example, which the client has presented to you? And what it just helps is it creates a different level of confidence. And in future, this will just open doors for the underserved business community, as you have pointed out, and will just help in terms of putting capital into their use, because you have a better understanding of the underlying risk and you're going with your eyes wide open.
Alternate data is a significant input for credit as well as the business perspective. Any other question?
Goods going to Satish. We're talking about the supply chain for the goods and finance and smart contract. Does SMEs do this on tokenize this on the LC or sell credit?
Short answer is no, not yet. But I think what we are trying to do is to kind of look at the commercial transaction that's happening. And it's largely remained a cash use case for now, right? Where the focus has been automating payments. But then nothing stops us from using the underlying principles to start pushing a trade transaction, right? Releasing a working capital loan or issuing a letter of credit and actually lend itself. Because underlying principles of the technologies is going to be largely same. How do you imagine? How do you contextualize that to different banking products? Is left to the bank.
I understand Citibank had done that last year. Use blockchain to clear the LC. Give us a couple of days to trade.
Tokenization of trade assets has been a topic. I think MA has launched Project Guardian in the SFF a few years ago. But I don't think the flywheel effect has taken. So any blockchain-based solution, be it on the payment side or trade side, needs ecosystem to evolve. You need participants actively transacting on the network. I think, and I dare say, any blockchain-based network proposition has not taken off because it has remained islands of innovation, right? What you need is probably an archipelago, right? Connecting all these islands. Either there has to be one super archipelago which kind of controls everything, or there needs to be interoperability between these islands, right? Unfortunately, it hasn't happened, because of which some of these initiatives has not taken off yet, right? I'm not saying it will never take off, but there is still some work to be done before we actually see the true value when it actually reaches a global scale.
Thank you for the fantastic question. We'll draw a close here.